Hello everyone. So far in the last 2 weeks, global momentum had been good, but our Indian market fell like crazy. Now, Thursday night and Friday night, global momentum itself now down. So along with the list of things that could drive the market this week, let's discuss those first in detail. Then we can discuss our regular pre-market report for today, 18th November 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, about the list of things that could drive the market this week are FI data, 2 weekly expiry, Maharashtra election, and finally Ukraine issue escalation. FII from 28th September onwards, 34 straight sessions in the cash market, they net sold the shares for almost near 1.5 lakh crore rupees. So on an average, every single session, roughly they sold for 4,000 to 4,400 crore rupees. Even on last Thursday, FII net sold for 1,850 crore rupees. On the other hand, to some extent, at the same 34 sessions period time, DI did net bought for 1.3 lakh crore rupees. Even on last Thursday, DI net bought for near 2,500 crore rupees. So market corrected 10% despite DI supporting the market. And honestly, I don't know when FII will stop selling. Initially, I thought positive things in MSCI index rebalancing might provide some support. But let's see, the implementation date for that will be November 25th, 2024, which is next month. If not, they stop selling on that basis, then they are doing it just to show their yearly performance. In that case, possibly selling might continue in December as well. Anyway, the point is, if they continue their selling spree means, then that will dent even the local DI investor confidence. So I expect everyone will be keenly watching the FI data. Then second, about weekly expiry. From this week onwards, we are not going to have Bank Nifty weekly expiry, only monthly expiry. As per SEBI's guidance, last week's expiry was the last weekly expiry. Apart from Bank Nifty, today we got last weekly mid-cap expiry and tomorrow last weekly Fin-Nifty expiry. After that, there won't be any weekly expiry apart from Nifty and Sensex. So we can expect those position related adjustments. Third important one is Maharashtra Assembly election on coming Wednesday. Since Maharashtra is the largest economy in India, it do carry weightage. Election is on Wednesday, but the results will be declared on 23rd November, Saturday. However, at the end of the day, 20th November, lots of news websites will be releasing their exit poll results. So according to that exit poll results, we can expect market to react on Thursday Nifty weekly expiry. Just for info, coming Wednesday, our Indian market will be on holiday. Fourth, last night there was a massive escalation in Russia-Ukraine situation. 90 drones launched 120 missiles, which caused severe damage to Ukraine power line. Because of that, now there is news floating around Biden allowed Ukraine to retaliate on Russian soil. Please pause and read the news. This is now developing dangerously as I am making the video. Both really very much concerning. As this situation escalates further, then this will cause massive influence on the stock market. Hence, please keep an eye out on the geopolitics side. So these are the 4 things I expect that would drive the Indian stock market this week. Now coming to our regular stuff, on Thursday night in some event, Fed chairman made the announcement that Fed did not have any need for rushing the interest rate cut and they believe economy and labor market is strong, so they want to prioritize the 2% inflation target, which in turn crashed the US market on the last 2 trading sessions. Last Friday night, Dow Jones down by 0.7%, S&P 500 decreased 1.32% and Nasdaq crashed 2.24%. In case of US VIX, it increased massive near 13% and moved above 16. Coming to oil, there was China demand concerns which in turn crashed over 2% on Friday and at present it fell another 0.5%. At the time of this video, Brent crude is trading around $71 per barrel and WTI crude trading at $66.5 per barrel. Moving on, regarding Indian ADR, in line with US market, all closed really negative. Only HDFC Bank closed near flat. Even if we calculate the arbitrage, at present ICICI Bank and both IT stocks got at least 1% negative, only HDFC Bank indicating some reduced negativity. Then about GIFT Nifty, at Saturday early morning it closed at 23,445, equating the 60 to 70 points premium. It's indicating a gap down opening of over 100 to 150 points. So that's all about the global market. Let's see the India specific related info. In the future index market, proprietary traders traders increased their short position to 63% from around 57%. At present, DII, FII and proprietary traders all in future index having significant short position. On the other hand, it's only retail investors who have 68% long position. And if required, please pause and have a look at the segment-wise put-call ratio and the detailed open interest analysis I added in the YouTube community page. Please refer it. Apart from that, during weekend, Reliance Industries requested the Indian Ministry to review the Elon Musk satellite spectrum allocation process since this could dent the local Indian business. So based on ministry's response, market might react. Then second, as per Federation of Automobile Dealers Association, compared to last year, this year festival season, automobile sales increased by 12%, which looks positive to me, but I can be wrong. However, we can expect auto sector will be on focus. Finally, on Friday, Indian Commerce Minister recommended the central bank to cut the interest rate for boosting the consumption. So we can expect market to react for this as well. As a summary, S&P 500 and Nasdaq down over 2%. So global momentum is not good at present. In line with that, Indian ADR and GIFT Nifty all indicating gap down opening of over 100 points. However, this FADA's auto sales statement is positive for auto sector and Commerce Minister rate cut recommendation is also positive. So, will it be enough to arrest the fall? Don't know, only time has to tell. About the things to look out. In the afternoon, Euro area's trade balance is the only macro I think we need to keep an eye out today. Coming technical, last Thursday, Nifty opened 20 points gap down and extended its negativity for the 6th consecutive session and closed just around 200-day exponential moving average. Thus, on the daily chart, Nifty formed a gravestone doji candlestick pattern and continued the lower high and lower low formation. Here, this long upper shadow suggests that buyers tried at the beginning of the session, which was overcome by sellers at the end of the session. This often comes just before a longer term bearish downtrend, so let's hope it's a false signal. Additionally, Nifty is now trading below all key moving averages, with RSI and MACD momentum indicators showing negative bias, all indicating a bearish sentiment. However, one positive thing, the hourly momentum indicator has triggered a positive crossover. Hence, considering all, if today Nifty decisively breaks below 200-day exponential moving average, then selling pressure could intensify and 23,200, which coincides with 50-week exponential moving average, is the next level to watch. In case of a rebound, Nifty might face resistance in 23,600 to 23,800 zone. In case of Bank Nifty, it opened 30 points gap down. However, unlike Nifty, it defended the 200-day exponential moving average on a closing basis as well as the previous day's low, then closed at 50,180. Thus, on the daily chart, Bank Nifty formed an inverted hammer candlestick pattern, though not a classical one, which is a bullish reversal pattern. Bank Nifty traded well below all other key moving averages 10, 20, 50 and 100 exponential moving average and closed below its upward sloping support trend line. Additionally, it is also trading in the lower band of the Bollinger Band, hence consolidation cannot be ruled out. So from short-term perspective, on the downside, 49,700 was the support to look out for, and on the upside, 50,560 to 50,700 will act as a immediate hurdle zone. On the monthly options front, the maximum call option open interest was at 24,000 strike, followed by 24,500 and 25,000, with maximum new call option writing at 24,000 strike, followed by 23,500 and 23,600. On the put side, the maximum open interest was at 23,000 strike, followed by 23,500 and 24,000, with maximum new put option writing at 23,100 strike, followed by 22,200 and 23,500. Thus, from options data, 23,000 is expected to be a key support zone, while resistance is placed at 24,000 on the higher side. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.